Today's episode, we have Russ Morgan. He runs a community where he teaches you how to build passive income until it replaces your lifestyle expenses.
If your goal is to become financially free, I believe you truly can do that is when you have more passive income than you have monthly expenses. We buy raw vacant land and we turn around and we sell it on owner finance terms. We tend to average a little over $30,000 a month just from that one area. It allowed us to go from $2,000 a month to passive income to $50,000 a month.
Russ, welcome to the show and thank you for being here today.
Vince, it's a pleasure. I'm looking forward to it, man.
So before we get started to everything that you've built and where you are now, let's go back to the beginning a little bit. You are in Birmingham currently. Could you tell us what your life looked like before real estate and before building out this whole ecosystem around passive investing?
Yeah. You mentioned I was a certified financial planner, so my job was to separate people from their money. That's what I say today. But yeah, I was an investment advisor. I was just dealing in market-based securities. I was not thinking about alternative investing. Obviously, my training didn't teach me that was a strategy, because in that world, most of those options are not available on the platforms that the average financial advisor has access to. So we don't even think about real estate or other ways to build, what we talk about today, passive income. It's all about how do you grow, a number to some big amount into the future. But as a reality, my goal was to, build up assets under management. So I was building my own passive income streams through fee-based revenue.
Before we hit record on the episode, we chatted for a little bit and you had mentioned that you wanted to share your passive income reports with people. And at the time, you only had $2,000 a month of passive income coming in. And today you've been able to get that to $50,000 a month through the businesses and investing that you've done, which is truly unbelievable. That probably puts you in the 0.001% of people on earth. So there's so much knowledge that you're going to be able to share with people today about how you actually did that, the lessons you've learned, the blueprints and frameworks that you've seen that actually build wealth for you and for all the people that you served, thousands of people at this point.
Yeah, I hope so. And obviously, the frameworks are everything. I think most of the time when we're talking about investing, most people think investing is hard. I would tell people it's the decision-making part that is hard. So when you build those frameworks, those filters into your life, you have these rules that you can follow, then it makes the decision-making so much easier.
How would you describe who you are and what you do in one sentence? How would you describe yourself? Because you've had your hands in so many different things now, and there could be a lot of different answers to that question, but I'd like to hear it from you.
Well, our goal is to help 1 million people become financially free. And we believe financial freedom exists when you build more passive income than you have monthly expenses. So my goal is to be that educator, someone who teaches someone how to get access to their cash, how to put that money to work, and how to become a better investor. Robert Kiyosaki has a great quote that says, "There's no good or bad investments. There's only good or bad investors." And so oftentimes, most people have never been taught how to become a good investor. And as a result, either one, make bad decisions, or two, don't make any decisions because they're afraid to.
What were things like for you when you were growing up? It seems like you became very focused on business and success and money through also being able to help a lot of people and unleash financial freedom for people. Did you have a childhood where things were abundant, or was money kind of lacking? And did that kind of drive you to go into a career where you could learn a lot about finance? And I'd like to kind of see how that bridges from where you started, what you majored in college, where you went. I don't know these things about you, and I'd be really curious to find out.
Yeah, no, I didn't have a lot of money. My dad was a blue-collar construction guy. My mom was a school teacher. So money was not growing on trees, if you will, right? I was every weekend going to work with my dad on some job site, carrying shingles up a ladder or, digging a hole somewhere. And whenever I got out of school, my goal was to never have to do something like that again. I went to work for a company called Enterprise Rent-A-Car. I was a management trainee guy and, scaled up the ladder pretty quickly. I learned a lot about how to run businesses, how, balance sheets work, how to effectively make a profit every single month. And that led me to say, hey, I want to become more financially successful myself. Well, the best way to do that, get into another sales-based business, which is financial advisory. And that's what led me ultimately into this space. And the great financial crisis of 2008 led me to where I am today.
Oh, that's really interesting. What were things like for you in 2008 as a financial advisor?
Rough. really rough. The hard part for me, for 4.5 years prior to that, I had gained a lot of personal credentials, right? Became a certified financial planner, which is very difficult, not an easy curriculum to go through. And only a fraction of people will take that test and then also pass. I thought that I had built a lot of knowledge as a result, but I realized that knowledge doesn't equal, what the experience of doing things does. And I just remember I had had a conversation. I'll give you one example, Vince. I had been over in Mississippi visiting with some clients. They had been referred to us, and so I usually did not travel like that, but I traveled 3.5 hours to visit with them, and they were fairly successful. And the husband and wife was talking about, hey, we're about to hand over our retirement assets to you. And, we have heard a lot of great things. Our biggest fear is what's happening in the market space right now. And we're listening to Rush Limbaugh and all these other experts, and they're saying things are maybe not turning out the way that they were wanting. And what would you tell us to do with the money? And of course, my training had told me, hey, think long range, right? It's buy and hold. So no matter what the dip is, our goal is not to worry about the next 6 to 12 months, is to worry about the next 6 to 12 years. And I was just repeating those lines. And they said, okay, we trust you. And we invested large 7 figures and put it in the market. And about, I don't know, three months later, I'm sitting on a golf course. A buddy of mine on his BlackBerry at the time, which is very funny, tells me, hey, do you know the Dow just finished 800 points down? And in concert to what that was then, that was a huge, you'd see the Dow move 10 or 20 points a day. But that was a significant point. And so what did that do to me, Vince? I was petrified. My palms were literally up to the sky saying, what do I do now? And what was more scary than that is all the mentors that I had in the business at the time, I started asking them questions like, guys, what happened and what's going to keep it from happening again? You know what their answer was? We don't know.
That's right.
And for someone who's in the business of helping other people, people are relying on you, right, to be that person for them. The weight, I felt like Atlas with the world on my shoulders, and I didn't know what to do, and I didn't know what was going to keep it from happening again. So it was a very scary time for me, and it's what led me to trying to find other ways to be in more control, to reduce the risk, and not necessarily just put it on my back, but to teach other people how to become better investors, because ultimately the investment world is broken in that regard.
Why do you think that Wall Street fails most people?
Because it's a easy button business, right? I mean, how many things have you ever been greatly successful in where you knew nothing about it, right? I mean, the average person investing in the market, there's $30 trillion or something like that invested in 401ks, IRAs, and other areas where they have handed it, abdicated the responsibility to someone else, and they have no idea what makes it go up or go down, but it changes their lives on a daily basis, because when they see these drops, it freaks them out. They stop spending money at home. On the days up, they go, oh, we can go on vacations, but they don't ever touch the money. It's paper. And I think that it's created a world of dependence on, somebody else, when we should be knowledgeable. We should be able to inspect what we expect. And I don't think the average person knows how to do that. And Wall Street's done a great job of collecting dollars.
Yeah, that's certainly right. So you had to then figure out what you were going to do next. And I would say that what you went through as a financial advisor in 2008 is probably similar to what realtors and lenders and closing attorneys have gone through in the past 3 years, where affordability went from all-time highs to all-time lows very, very quickly. And the number of transactions has just fallen off a cliff. So it might be a pretty similar environment where you just have, you've got way less volume that people can actually partake in. And so how long did it take for you to build the next thing? And what did you build that came next?
Yeah, so I went to an event January of 2009 where there was probably 500 other advisors, CPAs, CFPs, CFAs, and I heard this one speaker talking, and he was sharing a message that connected with me, because he said, hey, if you guys are tired of the ups and downs of the market, let me teach you how to become your own banker. Let me show you how you can get access to your cash, and then opportunities will find you. Because what was happening in 2009 for those people who had access to cash, who had dry powder, They were buying properties at pennies on the dollar, right? We've interviewed people on our podcast who, there's one guy named Scott Jelinek. He had over 150 properties, and there were rental properties, and every single one of them went back to the bank during that time frame. Then he went out and got private money and went and bought the same properties back from the bank at like 10 to 20 cents on the dollar. And that's where his wealth grew significantly. And I saw so many different situations like that. But for most people, all of their money was tied up in the markets. And so when the markets went down, they didn't have the opportunity to take advantage of the deals on discount, right? It's just like everybody's seeing the real estate market go up during COVID 21 and 22. Well, yeah, but if you were selling a house to have to go buy another house, like it didn't make sense.
Right.
Well, this is what I was experiencing. So I was listening to this guy who was in his 70s at the time teach on this very simple concept. And I read this book on the way home and turned the book over, Vince. And do you know what? The guy's address was on the back of the book. And you know what city and state he lived in?
The same city as you.
Birmingham, Alabama, exactly where I live. And so for about 10 years, this guy became a personal friend and mentor to me. And it changed everything about the way I think about money, how I build cash flow, and how I teach others.
How do you think about it now? How did your perspective change through the relationship that you've had with that mentor?
Yeah, I used to think about building up a huge net worth. I thought it was all about, getting multiple 7 figures, 8 figures, whatever your number is. That needs to be big enough so by the time you get to quote unquote retirement, then you can then, ride off into the sunset. Well, I don't believe in retirement.
Live off the 4% rule or something like that.
Yeah, exactly. Yeah, we've interviewed Wade Fowle on our podcast before, and he said, "Well, no, it's probably no longer the 4% rule; it's more like the 3% rule." But the reality is that when you consider that most people want to enjoy their lives today, not wait 30 years, right? Because I have 4 kids. I already have one that's in college and gone. I have a second one that's 18 and graduating from high school today. The things that those kids wanted to do with me when they were 5 and 6 is not the things they want to do with me today when they're 18 and 21. And that resonated with me as a dad, as a husband, as somebody who wanted their time back. And so I wanted to think about not building up some number. I wanted to build up cash flow. I wanted that cash flow to remove or reduce the stress that I had on me as an entrepreneur, having to feel like I need to make the income every single month to pay the bills. And so my life has changed dramatically from that perspective. And it's, there's been a lot of people that said that relates to, resonates with me too. I want to do that.
Real estate is a team sport. You can grow so much faster if you're in the right room. The Launch REI Mastermind is a curated space for investors who want to move from hands-on execution to professional portfolio management. This is your personal board of directors. Inside, our conversations go beyond the tactics. We cover the decisions that actually change outcomes, structure, tax strategy, and capital allocation. If you want to build alongside a vetted peer network designed for the long term, apply for the Launch REI Mastermind at the link in the show notes. I'm curious, what kind of stages do you think that people are at? Do you think that you're able to kind of put them into buckets and based on the stage that they are at, whether it's their income or their net worth, this is the greatest opportunity or what they should be doing when they're at these different levels? I'm kind of curious if you have some way to kind of categorize where people are and what's going to take them from where they are to the next step or that next phase that moves them up a tier on the ladder.
Yeah, it's a great question. So one of the things that we use in our business is we call it the right next thing. And I do think people are all at different levels. I believe there's steps to becoming financially free, and I don't believe you can skip steps. But not everyone starts or is at the same spot, right? And so we look at it, there's people that we meet where we would say, if you became financially free tomorrow, what would you do with your life? They're like, I have no clue. And so we were like, okay, we need to focus on what that vision looks like, right? So that way you can actually realize it. For others, they've been dreaming about it. They know exactly what that looks like. So what we would talk about with them would be completely different, right? We would start focusing on, okay, how much access to your cash do you have? And some people have zero, some have lots. And so the same thing would be true then. It's like the next step for us would be, how do you start building passive income? Well, the first thing is, how good of an investor are you? Do you know what your investor DNA is? Do you know what your investor buy box is? Right? Have you built your due diligence checklist? Before you ever go and invest, you have confidence that the money's going to come back to you. And some people have done hundreds of deals and some people have never done one. So it depends. Yes, there are phases to where people are along the road. And so our job is to help them with the right next thing. How do we level them up from where they are, whether it's needs an upgrade, needs help, or is good, and then we move to the next box. So there's a very specific process that we walk every single person through that we meet that wants to engage in our process.
Do you think with the way that do you think the way that we've seen wealth inequality shape up over the last 10, 20, 30 years, where around 1% of people has I think it's around 38% of the wealth in the country. Do you think it's a game that is kind of rigged at this point? Or do you think that most people can actually have financially success with the way that things are set up right now?
Yeah, I am an advocate that we live in the best world, best environment, best country in the world, that every single person has an opportunity to grow. Now, does it matter who you're around? Absolutely. Does it matter what your mindset is? Absolutely. But myself and my business partner both came from families that made less than $50,000 in any given year, right? Like, now, did we have loving parents? Yes. My parents were divorced. His parents were married, but neither one of them made over $50,000 in any year. So I believe there's an opportunity to make it. But I do believe you have to surround yourself with people that, one, believe in you, right? We had that conversation with some of the people that have been just sharing with you how much they believe in what you're building there at Launch REI. And I understand why after that conversation. Well, when you get around people who can level you up, or you can get around people that can pull you down. I don't spend a lot of time with people that I used to when I was younger, right? I grew up in pretty tough environments, public school in Alabama, in Montgomery, Alabama, of all things. There's a lot of people that, their lives is in a cell block right now, or no longer living. I don't spend my time with those kind of people. I find people that are levels ahead of me, and I've made a lot of people mentors. They don't even know that, whether it's on podcasts or videos or whatever. And I do think that you can grow. You have the ability. You don't even need money. Some people's like, well, I just don't have money. Well, there's 5 different ways that you can grow wealth, and money's only one of them.
What did the path kind of look like after the financial crisis, kind of working our way from 2009 through 2020? What types of businesses were you creating or working on? Where was your actively earned income coming from? And how were you kind of investing, if you were, throughout that decade? Because we were in a really strong bull market where, whether it was real estate or stocks, everything was going up relentlessly for that whole 10-year span. So I know that you started to build out businesses and get involved in different things. And you built an incredible network doing it too. I know you started the podcast in 2017, but I'm curious what the timeline looked like of the business ventures over that decade.
Yeah. So the first part I started was active income, right? So I went to all my existing investment clients and I said, hey, Vince, I'm sorry. I thought what we were doing was the best thing to do. I now realize that there may be a better path. Here's a book that I read. I want to get your opinion on it. I'm moving in this way, meaning I'm moving my money out of the market. I'm moving my money here, and I'm going to figure out what the next thing is to do after that. If you're interested, I'd love for you to read it. And that's where I started. And so people started reading that book called Becoming Your Own Banker by Nelson Nash. It's an 85-page book that teaches you how to get access to and control of your cash. And so then part of that is actually putting your money in a dividend-paying whole life insurance policy. And I got my license to be able to help people do that. So since 2009, that became a huge driver of my income. And then like the next step is, like you said, what do I do with the money? Now I have cash. What do I do with it? And that was a hard part for me because I'd only been trained in the investment markets, not into alternative investing space. So I started looking into all these different things that you can do, life settlements, private placements, multifamily, everything that you've probably talked about and done personally. I was trying, but I didn't know exactly how to do it. I lost a lot of money, man. I've lost over $1 million in different deals, gone defunct and bad, and lost lots of time as a result of that. But one of the things that I learned is that I have an investor DNA, you have investor DNA. And that investor DNA gives us a thought process just because of the way that we're built of how we attach to certain things, the way that our resources connect to different elements. And my first investments were in single family rental properties. And I had buddies who had hundreds and hundreds of them, very super successful. And I thought, well, they're doing it. Why shouldn't I do it? And so I went and bought the very first property in Auburn, Alabama, which was my college town. And I thought, oh, I'll just buy one and then I'll buy two. And the next thing I'll know, I have 100. And Vince, it wasn't within 30 days that I realized it was the most terrible investment, but I didn't know why. I was not excited about it at all. And I realized that later on, as we started, developing this investor DNA concept, that my profile loves immediate feedback. I'm spontaneous. I like to be involved. I like to influence. And a long-term rental, you can't do that, right? Maybe you can be the one who rents it out, but it was in a town, 100 miles from me. So that wasn't really an option for me. Couldn't influence its outcome. And so I really didn't want to invest. But then the next thing I got involved in was short-term rentals. And we took that business from 0 units to over 25 units within 18 months. And it was a business. We hired an operator. We trained the operator how to market, how to manage, how to create the finances, to create a true business, because that's what I love is business. And so all the investments I've been involved in, we've created some level of business around it. And that's where my love language is that I love that side of it. And I think most people don't understand what their investor DNA is, so that when they start investing, sometimes they make a lot of mistakes like I did early on.
You had touched on alternative investments and used a few terms that most people are probably not familiar with. Could we get a little crash course from you on alternative investing? What is that? What types of things fall inside of that bucket at a high level, just to kind of give people an overview of what that looks like, because it's something that doesn't get talked about that much. And I'd certainly like to understand, what do the risks versus returns look like? Who is this for? Why don't you hear about it? And is it something that only the top 1% of investors should be talking about and thinking about? Or is it something that upper middle class Americans could be looking at as well? It just might depend on the risk and return profile, but would really like to hear how you think about alternative investing and what types of things are included there.
Yeah, when you think alternative investing, most of the typical place that people would say investing comes from would be within the markets, right? They're investing in their mutual funds and their 401k or IRA. They're buying, Google stock or, Nvidia or something like that. And alternative investing could be that you're investing in a fund. Maybe that fund is in multifamily, it's in self-storage, it's in RV parks and mobile home parks, whatever. That would be an alternative investment. Alternative investing could be that you're investing in life settlement fund, where it's a pooled investment where people are like selling insurance policies that they own to a group of people to get cash. And those people now own those insurance policies. And when those people die, they get the cash, right? That's an alternative investment. Cryptocurrency could be a form of alternative investing. It's something that's probably not traded on a public exchange, would fall under that, big general alternative investing. Now, the question, should they be investing in it? That's the part that's for you, right? Like, what is your investor DNA? And also then, what is your investor buy box? Most people don't think about what they should invest in and who they are before that. And if you don't, you'll get that wrong. So your buy box is going to consider what types of assets would you want to invest in, the geography of those assets, how much capital are you willing to invest, minimum, maximum, who's the operator, do you know the operator, what sort of cash flow, time frame of the cash flow. All of that would dictate your investor buy box, which then would dictate whether or not you should or should not invest in it, because if I get good results in it, doesn't mean you will, Vince. Because I may have different skill sets, I may have different resources, I may have different timelines. But those and vice versa. So when I tell people, when you're investing, there's no good or bad investments. There's only good and bad investors. You need to know who you are. So before you ever write the first check, you know that you've checked every single box. You have confidence before the first distribution ever comes back to you.
I'm curious if you think people should be focused more on active investing versus passive investing, because everybody wants passive income, but a lot of times their active income isn't high enough to support them getting enough passive income.
Yeah. Well, in order for it to be passive for you, it has to be active for somebody, right? I teased this a second ago. So there's 5 ways to make money. And this is the redneck motor. And the acronym, and most people would spell motor MOTOR. We spell it in Alabama MOTER. So money, right? sometimes you have to have money to do a deal. O is the opportunity. Maybe you have the opportunity to do the deal. Or T, the time. Maybe you have time to be able to do the deal yourself. E, maybe you have the experience. Or R, you have the relationships. So one of those 5 actually can allow you to get involved in the deal. Sometimes you're just the money. You are purely passive. Or you have the experience and you can be on the cap table and not actually have to spend any of your time involved in it. But maybe you're the active person. Maybe you are bringing the opportunity, or you're bringing the time, or you're bringing the relationships. And so you're active. I think it depends on the person. It depends on where you are in that game. Some people want to be purely passive, but even passive is not passive. Doesn't mean uninvolved, right? Like every single syndication that I'm involved in, I needed to know enough about the deal on the front end and needed to be able to do the correct due diligence on the front end before I ever wrote a check. And now I have to be able to inspect what I expect. I have to be able to follow up with those operators and find out, are they meeting the timelines that they stated, right? Why or why not? And as those checks come back, am I verifying and validating what they said would happen is happening? And all of that becomes a level of activeness. Now, doesn't mean I'm trading, 10, 20, 30 hours a week for that deal, but there's probably some level of involvement. And depending on where you are with cash flow, maybe that's, dictates how much time that you spend or you don't.
I'm kind of curious about a framework that you've talked about before. Can you break down the PI versus me, that type of relationship? What do those acronyms stand for? Because I think it would be really helpful if I could understand it, and also if you could share how you kind of think about it for other people as well. It seems like it's part of a kind of a core model that you kind of talk people through in terms of how you think about passive income.
Yeah. When people listen to podcasts like yours, I'm sure they hear different investment opportunities that produce passive income, PI, right? Sometimes they listen to podcasts like, say, Dave Ramsey, and they think about the ME, monthly expenses. How do I pay off debts? And then they ask the question, especially early on, which one should I pursue first, chicken or egg, right? What do I do with my dollar? Well, the beauty of any framework, if it's a good framework, gives you insight to what the decision should be. Right? So my goal is not to become the investor for people, is to teach them how to fish. So when you have $1, if your goal is to become financially free, meaning that you get to do whatever you want to, whenever you want to. And the only way that I believe you truly can do that is when you have more passive income than you have monthly expenses. Well, then every time you have a decision to be made with your dollar, you ask the question, if I take this dollar, can I buy an asset that produces a passive income? If I take this dollar and I pay off a debt, will it reduce my monthly expenses? And people say, well, what if I have both options? And I say, well, which one produces more, right? Which one produces more passive income or frees up more income or expenses, right? And they go, oh, I didn't think about that. So every time I make a decision that I'm investing and it doesn't produce a passive income or it doesn't reduce a monthly expense, I ask the question, well, is that getting you closer to financial freedom or further away? And it becomes very obvious. And they go, well, I'm making a lot of bad decisions. I was like, well, do you want to change, right? Is your goal financial freedom? And if it is, then now you know. And so for us, that became the simplest framework that helped change the game. It allowed us to go from $2,000 a month in passive income to $50,000 a month in passive income because we knew what we were after, right? We started going after investments that produced income. Doesn't mean that's always the best investment, right? There's opportunities may have higher ROI, but that's not what we were wanting. We were trying to create more cash flow than we had expenses. And so every decision we made, which is why if you ever played the game Cash Flow by Robert Kiyosaki, I love that game, played it with my kids forever, had the kids version before we got the adult version. How many times, if you've played that game, have you ever paid off a debt? Never. You never do, because that's not the way you win the game. You've got to get more passive income than monthly expenses. Now, it doesn't mean that paying off debt's a bad thing. It just means that most of the time we've got to learn how to become better investors, and we can accelerate for income side greater than our monthly expense side.
So I want to break down a little bit your portfolio. Excuse me. you've got your $50,000 a month in passive income. I want to break down where that comes from. How much of it is coming from different areas, whether it's businesses that you own, but you've positioned it so that it becomes passive for you, or hard assets that you've invested in, like real estate syndications or direct real estate that you own. If you still have short-term rentals, if you've invested in some alternative assets, I'm really curious how your $50,000 a month in passive income actually breaks down.
Yeah, well, thank you. And by the way, every single month we share this passive income report with the world. So you can go to our website, scroll to the bottom, see passive income report. You can look through it. We share those numbers, and we do a podcast, YouTube video every single time. So as you look through this, you'll notice that about 20 different line items on our passive income report, and they're made up of a lot of different things. The lion's share of the money comes from one asset class, which is actually where we buy raw vacant land, and we turn around and we sell it on owner finance terms. It's been the greatest way for us to build passive income. We tend to average a little over $30,000 a month just from that one area. And it's the thing that most people, especially in the real estate game, like, how do you make money in land? Land is not an easy thing, right? Like, because you're thinking about buying big chunks that cost hundreds of thousands or millions of dollars, like in these infill lots in downtown Atlanta or San Francisco or whatever, and trying to flip them. Yet we're buying like acre properties in the middle of New Mexico and Utah and Nowhereville, Florida. And then we turn around and sell it on Facebook Marketplace or Craigslist or other land websites to someone who a realtor is not going to do the deal, right? It's not big enough. Like we're buying a property, say for $5,000 or $10,000, we're selling it for $30,000 or $40,000, and we're selling it to them on owner finance terms, just like a car payment. And so what we've built is we've done probably almost 1,000 deals at this point on owner finance terms. So we have all these monthly note payments coming to us that average somewhere around the $30,000 a month range. So that's a big lion's share of what we're doing.
Oh my God, that's insane. I've got to dive into that. Okay, so we're obviously going to get to the other parts, but this is crazy. You are making $30,000 a month in passive income from land by buying it, I'm guessing, in cash, and then turning around and owner financing it, and you're able to get 6 times to 8 times more value from the property because you're owner financing it and getting those monthly payments over time for a way higher price.
Yeah. So ideally we buy it for $1, we sell it, we price it out at $4. Okay. So if I paid $5,000, my goal would be to go and sell it at 20 and sell it over a period of time. So certain amount down, certain amount every single month for the next 3, 4, 5, 6 years. Now, do we end up making 6 or 8 times on certain properties? Sure we do. Because what? People get 6 months in, 12 months in, some life circumstance changed. They can't make the payment anymore. They have to default on the deal. And because it's raw land, we don't have all those landlord rights and all that bankruptcy and all that stuff. We don't have evictions and things like that. We literally end our contract with them and we go back and put it right back on Facebook Marketplace the next month and sell it to another buyer and then start the process over. Yet our basis is significantly less because the other person had paid down a ton of what we already had into the property to begin with. And so we have properties, that we probably make 8, 10 times on if they, turn 2 or 3 times because somebody unfortunately defaults 20 or 30% down the road.
I have a couple questions on this. Number one is, the people that are buying it, what are they doing with this raw land? Why are they wanting to buy it from you?
Man, this is the endless answer question. There is a pig for every barn. Vince, we've had people buy properties because they wanted to go ride their 4-wheelers in the middle of the swamp. We've had people buy properties because they like shooting rattlesnakes. We've had somebody buy a property because they wanted to film a movie on it. We have people who want to go off the grid and take their RV and sit out there in the middle of nowhere where nobody's around them. There are obviously a few people buy it because they eventually want to build a house on it or whatever. But it is the endless answer to that question. Like there's so many different reasons why people buy it, but it's the one thing that you can own, right? That can be yours. And for the person that's buying it, a lot of them, they want something. They want to have their own thing. And, when we're buying a property at $5,000 as a real estate agent, there's no realtor is going to market that property, right? There's no money in it.
No, so I'm
when we're
curious how
turning,
you would even find the buyers that would even want these, because
well,
land
that's
takes
why
a long time to sell. It's like a year-long process.
that's the reason why we're going on Facebook Marketplace and Craigslist and some of these land websites. And then we turn around and sell it. Well, they can't get financing from a bank. A bank's not going to give you a $15,000 loan or $20,000 loan. So we owner finance it to them. So we make it easy, right? Make it something in a monthly payment that they can afford. And so now for, $300 or $400 down, $300 or $400 a month, they can have this piece of property to do whatever they want to with it. And as long as they're not building on it, if they still haven't paid it off, we really don't care. As long as it meets whatever county regulations that exist out there, right? Every county is a little bit different and have certain requirements, restrictions that they can and cannot do. But yeah, I mean, it is a beautiful business. We met a guy named Mark Podolsky. He's known as the Land Geek. You should have him come on your podcast. And we learned this specifically from him, and have been working with his team to grow this business. And it's been fantastic.
This episode is brought to you by Easy Street Capital, the lender built by investors for investors. Whether you're flipping, building a rental portfolio, or executing a ground-up construction project, Easy Street has 3 nationwide loan programs designed to close fast with no surprises. We're talking 24-hour closings, upfront terms, and in-house servicing from start to finish. If you're ready to fund your next deal, go to easystreetcap.com/launch-REI to get started, or you can grab the link in the show notes. What would you say to people who might be listening who might say, you can make $30,000 a month in passive income through raw land, doing owner financing to people who can't really afford it? They can't get financing from the bank. You know that they are likely to default. You're able to make tons of profits on this. And you kind of know going into it that many of these people won't be able to continue to pay for it. And then you get the asset right back while they were probably expecting to own it one day. What would you say to people that think that maybe you could be taking advantage of these people because they have such a high rate of failure?
Yeah, well, I would say failure rate is about 20%. So 80% of the people that we sell to will actually absolutely make it. And our goal is that 20% would keep going, because as you mentioned a second ago, you have to remarket the property. Yes, we can make more money, but it doesn't happen immediately. So we're actually rooting for every single person that does it, because it makes our marketing costs stay lower, the sales transactions lower, all that stuff. But no, we're going to do our best on the front end to make sure someone can qualify, but we're not being their financial advisor. That's not our job. Our job is to give them an opportunity that they wouldn't otherwise have. So we believe like we're doing actually a service to the world, because most people out there, as we see land being grabbed by foreign countries and everything else, and it's becoming more and more expensive and less available, we're becoming a renter society, if you will. We believe we're giving people an opportunity to actually own something where that's not really a reality for most of them, because they don't have the cash. They don't know, one, how to do the deal, and they don't have the $5,000 or $10,000 to go buy it, even if they did. So by creating a monthly payment, do I wish every single one of them would make it? 100%. The fact that they don't, do we give them an opportunity, a month, 2 months to try to figure it out? Yes, we do. But usually the people that end up defaulting, it's not like us saying, I'm sorry, Vince, you're out of here, right? No, it's actually them calling us saying, man, guys, I really wish I could have kept this. It just isn't going to work out. It's either me, put food on the table, or me pay for this piece of property. I wish I could keep doing it, right? And they give it back.
So some of them end up owning it, and some of them it ends up going back, and it kind of ends up becoming they were just renting it, really. And so they got use out of it for the time that they owned it, and then it comes back to you.
Sure.
Are there pieces of land that you just can't find a buyer for, even someone to finance it with your seller financing? Because I would imagine that some of these, you might be sitting on it for a year or two, and you just can't get someone to latch on and take it, right?
Yeah, so absolutely different time frames, right? You don't ever know when someone's going to buy. Our business partner has done over 6,000 transactions and has never not sold a property.
Oh, that is interesting. That's really interesting.
So that you don't know when they're going to sell, but you're running a grocery store, right? Your job is not to have one aisle, right? You're to have 10 aisles worth of
exactly.
Stuff on the different gondolas. So you never know what somebody's going to come in the grocery store to buy. But if you don't have the item on the shelf, they can't buy it. So our job is to acquire every piece of property that is for sale out there at a good price.
Do you buy every piece of land that you can, or is there a certain buy box and there's some deal breakers and there's some that are in your sweet spot zone of, ooh, this is absolutely great?
Yeah, I mean, we know ahead of time. So we do mailers. So we know exactly what we're looking for. So when I mail somebody a letter, and I say me, like I don't, it's been 6 years since I ever put a stamp on an envelope or, on a postcard and send it out. But when we send an offer, we know that 3 to 5 out of that 100 will come back with a yes. And we will end up buying 1 or 2 out of those 3 to 5 yeses because they'll meet our criteria. The most reason why we don't buy them is because it's cloudy title. Like the person who we mailed it to no longer is living. They haven't gone through the whole process of deeding it out to the right person, all the different things. And it just isn't at those prices. It's not worth it for us to spend all the time and effort to get it fixed. So that's usually the one we're saying no to.
This is an unbelievable strategy, maybe one of the best passive income strategies that I've ever heard of in my entire life. I don't think many people even know about this. How did you even find out that this exists?
Podcasting.
That is so interesting.
Yeah. I was interviewing a guy. He was walking on a treadmill and he had done 5,000 plus transactions at the time. And he was telling me about this interesting concept with no toilets, termites, tenants, all the different things. And I'm like, this is interesting. Tell me more about it. And he used to do boot camps. He still does. Not as many of them are live the way they were. And so I flew out to San Antonio and went to this event and I was fascinated by it. I mean, there's an endless opportunity out there in the space. It's not like, right now you're trying to flip houses. You're competing with every HGTV watcher. Well, there's no HGTV show for this. We buy the land and we sell it. It looks exactly the same, right? It's all about buying it at the right price, putting in the margins of safety into it, kind of like Warren Buffett talks about, and turning around and sell it on owner finance terms. And as long as you've got capital and you've got the ability and the team to work through the process, you can be successful. I've seen people do this that are in our community because we've had this person on our show a ton. And I've seen people who drove skid steers around for a living, people who were school teachers for a living, who are now full-time land investors. This is all they do.
This is just incredible. What an unbelievable opportunity that I don't even know what else I could say. I'm just shocked. I'm surprised. And it almost makes me feel like I missed a golden opportunity because when I first started in real estate investing and I left corporate America, I was sending out yellow letters. I built a driving for dollars list. I was going after houses and I was trying to wholesale them to flippers and make a little fee on them. Barely making it, barely getting by until I started working as a realtor for actively earned income. But this is just a strategy that if I had known about this back then, I could have certainly brought in a partner that had money. I could have done a lot of the work and structured the deals. And as long as they could have maybe paid for the attorney fees to just get the contracts in place, I would have needed certainly some education around learning how this actually works. But could have built something over 5 to 10 years that generates 5 figures a month in passive income. And I'm sure that once you've done 3 or 4 of these or 10 of these, you probably start to really get it down and have a good system for it. And the more of these that you get, the risk is diversified because if you've got 50 of these going on at once, you could see how you might be making $10,000, $20,000, $30,000 a month in passive income by just owning a bunch of these land deals and leasing them out for much more than what you owe because all you have is the property tax payments.
Yeah, that's right. Well, it is we pay a lot of property taxes. There's small amounts, but we pay a lot of property taxes. Obviously, that's built into the model to determine what you buy it for and what you sell it for. But it's a business, right? Like one, you start out doing it yourself and then you hire a team to it. Or there are options out there where people will partner with the existing operator and they just fund the deal. And that's kind of what we've gravitated into once we built the business is that we're not hands involved. I'm not getting on calls. I'm not worried about these payments coming in, all of that stuff. I'm at this point a very passive owner in the business.
That is so interesting. Can other people invest in it, or is it something that's kind of closed looped and it's just you and your business partner that have it or something like that?
For ours, yeah, we have a closed loop LLC with an operating company. We're not looking for investors in it, but yeah, there's people that are, connecting with existing operators who are looking for that. I know lots of people have done it, and it's a fascinating opportunity. It's completely different than the quote unquote typical real estate. That's the world is when we talk about real estate, as we know, real estate is so wide, it's so broad. When I was an investment advisor, I just thought rental properties. Maybe it was an apartment complex or it was a single family. Now I realize that it looks so different in many different ways, a lot of which I've invested in different capacities, but this is one that has definitely had the most success for me.
This is awesome. I'm so glad that we got to this topic, and it's one that I didn't even know that we would get to. It wasn't in my notes at all, but we'll pivot to a topic that a lot of people are really curious about, which is, what do people need to know about using their 401k or their IRA to be able to invest in real estate?
Yeah. Well, real estate is a beautiful investment for the right person. And it depends on what you're looking for, right? For me, I'm just going to give you my opinion. I'm going to be very contrarian to the average person that may come on your podcast. I'm not a big advocate of any of the typical investment world models like using 401ks and IRAs, because what I love about real estate is it cash flows if you buy it right. What else I love about it? I love the tax benefits of it, right? Well, these are things within an IRA and 401k you don't get to take advantage of. So for me, right, if I was going to keep having an IRA, right, my business partner, when he was my client, he was working in corporate America with the Wall Street Bank, Wells Fargo. He started building cash flows outside of his IRA and 401k. And when he came to work with me, he was like, man, I don't want that anymore. And he actually cashed completely out, took the penalty and moved on. I'm not telling people that everyone needs to do that. Some people love it. So I believe if you're going to keep that money there, you probably should look for assets that don't need cash flow and don't have all the tax benefits of real estate. Because if I was investing in real estate, I'd be investing in it outside of that. But do I know people that do? Sure. And there's ways to do it. You can use self-directed IRAs, and you have to understand all the rules governing that. You can't get involved with it yourself. You got to have, an arm's length transaction. So you can't have the short-term rental property that you want to go to once a month down at the beach property, because if it's in your IRA, then you're going to have all the self-dealing rules and you're going to end up violating all of them. So for people that are looking to invest from their IRA, usually they invest in long-term assets that don't cash flow, that are more equity plays.
Do you think that you have any counterintuitive views on money that would be surprising to most people that kind of go against conventionally held wisdom?
You mean like a 401k is the worst investment for becoming financially free?
It could be that. Let's hear it.
Well, go back to the formula. I believe financial freedom.
I'm gonna argue the counterpoint, actually. So
okay,
I
love
your
it.
Perspective.
So, let's determine whether or not we have middle ground. Do you believe financial freedom is when passive income exceeds monthly expenses?
Yes.
Okay, perfect. So if I invest in a 401k, right, and I take that investment and I put it anywhere, will it produce passive income for me today?
If you put it in a 401k, there's no passive income coming at all. None.
Will it reduce your monthly expenses?
No.
So by putting money in a 401k, are you getting closer to or further from financial freedom as we just defined it?
As you defined it, it does not help you get closer.
I thought we agreed on it, though. I thought we agreed that that's what financial freedom was.
So the thing is when you're contributing to your 401k and you do it for decades, I think that there's a couple things that have to be talked about. I see a lot of people in the real estate investing space and financial gurus and influencers talking about that your 401k is a scam because you have to wait until you're 65. And I do think that there's roughly 1 or 2% of people, maybe 3 to 5% at the most, who can really and do really build meaningful assets and passive income to really enjoy their life on their terms before they're 60, let's say. But the thing is most people are not good regular savers. I think that if you look at most careers where people get paid in chunks and they don't get paid regularly every 2 weeks, they probably fail to save at the rate that they need to. Whereas the 401k is built in, you kind of have an automated path to probably building a 7-figure nest egg that you can live off the 4% rule in retirement. And that's why I actually still think it probably is the strongest wealth building vehicle that does allow you to retire, whether you call that financial freedom or not, in that range of 60 to 65.
All right, so I'm gonna push back a little bit. Thank you for pushing back on me. One, most people don't disagree with that term. Most people, the person listening right now, do you believe that they're most people, or do you believe they're unique?
Yeah, that's a good point. I would say that most of the people that listen to this podcast, they are seeking out exactly that 5% range where they want to live a life that's different. They don't want to wait until they're 65 to enjoy life. They want their passive income to meet their monthly expenses to hit financial freedom. They do not want that nest egg financial freedom that's coming in 30 years.
Yeah. So there's common advice and there's uncommon advice. And for the person you just described, are they common or are they uncommon? They're very
The person
uncommon.
I just described is common. That's the 95%. And we're trying to design things for the 5%, where your land investing is a perfect example of, what falls in that 5%.
Yeah. The 5%ers, the person listening to the podcast, the person who's taking time out of their day to get off social media, right? They're not just on there scrolling to see, cat memes and political rhetoric. They're looking for ways to grow their wealth. They're looking for ways to get more time with their families. They're looking for ways to maybe stop trading time for money because maybe they hate the job that they're working in. I love what I do for a living. I don't believe in the world retirement. I can't find that in the Bible anywhere. But also I know that I want the ability to not have to work, right? There's a difference between have to and want to. And the majority of people out there that fall in the common are working because they have to, not because they want to. And so for the uncommon, they need uncommon advice. So I believe for the common, the person who is not listening to this podcast, who is going to continue to just spend as much money as they make and is not worried about what the future holds, is not trying to actively seek better ways to grow themselves, then they should 100% do models like the 401ks because it will force them to save more than they otherwise would. For the uncommon people, I will say it is the worst tool because it doesn't produce a passive income today. It doesn't reduce a monthly expense today, which is the simplest formula. So how did I build $50,000 a month of passive income? It's not because I'm smarter than everybody else. I promise you that. It's because I was focused. What you track grows, right? So if you track passive income greater than monthly expenses, it will grow, I promise you. And what else did I learn? From a buddy of ours, mutual friend of ours, Sharon Srivatsa, he taught me what you track and report on grows exponentially. So why did I start reporting every single month in June of 2020 since then? Because I wanted that accountability. I wanted that focus, right? It's just like somebody who starts out the year with a New Year's resolution. Well, it's worthless until you tell somebody and you say, I want you to hold me accountable to going to the gym 4 times a week or no longer, eating certain foods or stopping drinking or smoking or whatever their thing is, right? For me, it was passive income. And I've seen uncommon results from uncommon people. So I've seen teachers who've never made more than $50,000 a year build over $10,000 a month in passive income. I've seen a guy driving a skid steer make over $15,000 a month in passive income. And by the way, he did it in less than 2 years. I saw a guy who worked in a development project, but within corporate America, be able to quit his job within a year because he learned how to do one real estate transaction that he could repeat that paid his annual salary in one deal. So I see it. That is very uncommon results for uncommon people. And so that's why I would say those are contrarian advice. Wealth Without Wall Street, very contrarian, right? I don't have a single dollar. I had a business partner who was a president of a publicly traded company. And when he told me he was going to take that job, I knew firsthand that that business was going to skyrocket because I already had personally experienced him and seen his track record. Do you know how much money I invested in that company? Zero. Do you know that that company grew like over 400% while he was there for his 2.5 to 3 years? But see, I also knew that I would know when he was leaving. And I knew that it's called insider trading if I would have sold it before he left. And I like freedom. I don't want to spend time in jail. So I also didn't want to participate in that. So I have very contrarian viewpoints, But also, I'm a believer in people. I'm very optimistic. I'm very, realistic in what opportunities are when you get involved, right? Risk is reduced when you can influence the outcome and you have knowledge and information of what makes it go down or makes it go up or go down. I think when people passively invest purely from an abdication stance, that they increase their risk and the results tend to go down as well.
I love the perspective on how, there's common advice for common people and there's uncommon advice for maybe the 5%, 10% of people that are actually trying to truly build passive income and wealth in alternative ways, and that it's achievable. And the results are so outsized and so massive. It's worth going for because it can completely transform your life. I think that we could easily do another hour, 2 hours, 5 hours on so many of these topics and stories and strategies that we just didn't have time to get to today. So we'll certainly have to have you back to dive into more of those in the future, but to respect your time and make sure that we're able to keep this within a reasonable range. We have to probably keep it here for today, but where can people find out more about you, the things that you've created, and the resources that you have available for people?
Yeah, we built a landing page specifically for this podcast. If you go to wealthwithoutwallstreet.com/launch REI, I'll make sure our team puts as many of the free resources that we have. We have a community with over 10,000 people in it, very uncommon people wanting uncommon results. It's 100% free. And I think that's uncommon as well. And you can participate. So if you don't have a group of people around you that is leveling you up to where you want to go, be a part of our community. But also the tools that we talked about today, Investor DNA, the passive income operating system, a lot of those things are things you can get access to for free on that page as well. And as well as being able to talk to one of our team members and figure out maybe what your right next thing is.
Russ, thank you so much. We appreciate your time today.
Vince, appreciate you having me on, man.
If today's episode was useful, subscribe so you don't miss what's coming. We drop 2 episodes every week. And if you want to go deeper, join thousands of investors getting our free weekly newsletter at newsletter.launchrei.co or check the link in the show notes. See you next time.